And welcome. It's Mary Ellen McGonagle here with your Friday afternoon MEM Edge show. As always, the show where we bring you where the action is in the broader markets. And we have the markets sitting up here at new highs. Kind of an unusual week. We'll get into what's taking place beneath the surface after taking a look at the broader markets. And some of the news last week that drove price action, we did get some weaker economic data earlier in the week, and that helped push interest rates lower. And that was highlighted by a Wednesday private employment report that was very weak, and that also pushed rates lower. However, today's employment report did push those rates up higher. However, I will tell you, the markets did not respond negatively, and a lot of that having to do with the fact that employment data is suddenly being viewed as not as forward telling or as relevant, but we certainly will see if we see rates go higher. I will share with you a view of those current yields to get a sense of how high is high before we do begin to potentially see a negative impact. Next week is going to be potentially highly critical. The FOMC will be having their meeting Wednesday. Fed Chair Powell will provide comments from that meeting. And then we also get core PPI and core CPI data next week. So we shall be on alert for that. Now, let's go ahead and take a look at those broader markets and beyond. And here we are. Here's a daily price chart of the S&P 500. A couple of notes here. We did intraday today on Friday hit a near-term high before pulling back slightly. Net, we were up about 1.5% for the week. We have a positive RSI and positive MACD, keeping that near-term uptrend very firmly in place. From here, let's go ahead and take a look at the underlying sectors within the S&P 500. It's critical to stay on top of where that relative strength is versus the weakness. This is the performance view for the week. From here, we're going to go ahead over to what's called a candle glance view. It's a 2-month daily price chart view. I'm adding a relative strength indicator, and we're going to look at these 11 sectors in descending order. So your stronger areas up here on this left quartile, weaker areas down to the right. And this view is very slow moving. It's not going to be highly dependent on last week. It is viewing that relative strength over time. And let's take a look. We have XLC, communication services at the forefront. This is an area that is very dominated by internet-related names, but there are other areas moving to the forefront. In addition, we are going to take a look at those magnificent 7 because there are names in those 7 that are just beginning to spring to life. So I'll share that with you as we move through here as well. Healthcare top performer last week, up 2%. Take a look. It did last week reverse this very short-lived downtrend. We're back above each of these moving averages with positive momentum indicators. I will share with you in the next segment where that strength is emanating from. I know my MEM Edge report has 2 of last week's strongest healthcare stocks on the move higher. Here we are with technology. This is XLK. It was the top performer, up 2.5%. In fact, last week, money flows into tech, particularly those mega cap names, were the highest in 2 months. So really, in essence, the tech area is currently highly supporting this uptrend and new high that's shaping up in the markets. So we have a positive RSI and MACD, which is very constructive for that technology area. And then moving through another area that reversed its downtrend, not quite as convincingly, but this is XLY, consumer discretionary. And you can see we dip back above these key moving average. We are seeing some nice strength in some of the bigger tech retail stocks, which is quite constructive for the group, but it's not really showing that momentum, certainly that I would want to see before overweighting it. And then down here in this lower quartile, take a look. Industrials are continuing to struggle, down almost 1%. Here's that pullback lower, a move below this 50-day simple moving average with a negative RSI and a negative MACD. So we are seeing relative weakness in the industrials. If you have names in this area, whether it's building related or electrical perhaps type stocks, you will want to take a look at them and make sure that they are not falling into downtrends. Also at the bottom here, energy XLE, and the price of oil did drop last week about 2.5%. And you can see last week we were on the lookout for a potential downtrend reversal. As you may recall, I made clear that it was not ready for prime time. We did not have that confirmation with that positive RSI, and the MACD was not in positive territory as well. And alas, lower oil prices pushing energy down. So from here, let's go ahead beyond these broader sectors. I have ETFs that I find very, very useful in staying again on top of where that relative strength is versus the weakness. Again, in descending order with that RSI, I'll go ahead and update it. We have the Nasdaq up here at the forefront. It was up 2.3%. We did also hit an intraday high before pulling back ever so slightly, but the uptrend very firmly in place for that tech-heavy Nasdaq. So from here, let's take a look. No big surprise. Semiconductors up here in that higher strength element in that upper quartile, and you can see that we are coming out of a nice potential base breakout and new high with positive momentum. Of course, Nvidia is a key driver. The stock was up over 10% last week, but there are other pockets of strength, and I have 4 names in this industry group on my MEM Edge report. Use that link below, nominal fee. You'll have access not only to those stocks, but the current outlook. I talked about healthcare reversing their downtrend very decisively. This is IHI, and it's the medical devices ETF. Now, not overly convincing, but certainly good to see that this growth, this is generally a high growth area within healthcare, has positive momentum characteristics. And I will be sharing with you one name that is in the beginning stages of reversing its downtrend. Another strong area within healthcare, this is IBB, up 2.3%. I'm going to tell you, my MEM Edge report had one of the top names in this group from last week, but take a look. We are back to this potential base breakout here at about 139, positive momentum being shown here. And you want to see biotech stocks outperform. This does imply investor confidence. Many of these biotechs are not yet providing earnings. You're really oftentimes buying a story, but the group is on the move higher. So as we move through, I mentioned I would take a look here at that yield on the 10-year. And the good news is, again, I talked about that weak economic data in the beginning of the week, and it did help push the yield down quite a bit. We got down as low as 4.28, but we did get a bit of a spike today, up 3.5%, but we did land for the end of the week at 4.43. So I'm going to, of course, keep a close eye on that and those Fed comments and those inflation data numbers next week. Certainly, we expect to see volatility for the interest rate environment. Also, taking a look at these lower performers and these lower relative strength areas of the market, home builders of note, we are seeing a continued deterioration. And this is despite that decline in interest rates, which will trickle over to mortgage rates. And that, of course, is impacting some of those industrials. And then last up, take a look, KRE. This is the regional banking ETF, down again, down 3.2% negative momentum here. These bank stocks are struggling, and in turn, you will see a negative impact in the Russell 2000. A big percent of these small cap stocks are regional banks. That's one of the reasons we're seeing this group down 2% relative to the Nasdaq and the S&P, up 1.5% and 2.3%. respectively. So from here, I did want to share with you, I talked about some of these magnificent 7 names and that move, broad-based move into mega cap tech names, but there are other mega cap names that had nice advances last week that bring them back to the forefront, certainly of my radar. And let's take a look. This is those Mag 7 names with the RSI in descending order. 2 stocks I want to point out to you. Amazon, AMZN, of course, up 4.5%. But with that move, we can see that we're back above each of the shorter term moving averages. We now have a positive RSI and take a look. This MACD is poised on the cusp of a black line up through the red, which would signal a new uptrend. Let's go ahead back. One other name that I did want to share with you is a name that has been struggling. This is Meta Platforms. Here is that drop in response to the release of their earnings, and it has struggled to regain that prior high, but take a look. On Wednesday, we did move back above this 50-day simple moving average, RSI and MACD now in positive territory. So from here, when you are looking at these big names that are beginning to reverse their downtrends, I find it quite helpful to drill down and take a look at the intraday. We're going to look at the 15-minute, and this would be an ideal way to potentially pinpoint your buy point if you are inclined to anticipate that uptrend. And on this 15-minute, I have that RSI and MACD here. And of note, this is taking us back to the end of May into the beginning of this month. And when you are looking for a buy point, you want to see this stock price move back above the shorter term moving averages and get that RSI back into positive territory. Now, we certainly had a bit of a head fake today as the stock fizzled into the close. What we did not get is that MACD crossover confirmation. So from here, if you are inclined, we can then go ahead to a 1 hour price chart. And we're on the lookout for those characteristics that would signal a new uptrend. And here we are with the move back above the 5 and 13-hour simple moving average, marrying that with a positive RSI. And there's that MACD crossover that took shape, which in turn developed into a nice 4-day rally. On the hourly, we're not in negative territory right now, but again, get that stock back above those moving averages for a potential buy point. Always have precedence as your guide as well, so that you can then capture that specific buy point. And then, of course, for these bigger names from my work, I would be more inclined to stay with them longer. They are the big cap leaders, and you will be well served. Here's Amazon on that 1 hourly. And again, very, very precise with this move. This is on my MEM Edge report. I've talked about it last Sunday. I talked about it again on Wednesday, and I highlighted it on Wednesday as in the very, very nice position of reversing this downtrend and move above this 5 and 13 moving average, coupled with that MACD crossover coming out of an overbought position, and then that RSI moving higher. So this is that hourly chart. At this point in time, we certainly are due a pullback. When you see an Amazon type name move 4.5%, we can anticipate that. And again, using that hourly can be really quite helpful as far as helping to pinpoint precise buy points. Moving through, I would be remiss not to highlight Nvidia. Again, it was up over 10% last week. Now, when these stocks really get moving, I'm just going to come on down here and add a 5-day simple moving average. And that can, in turn, that's this blue line, act as a guide on the daily chart. Pullbacks to that 5-day can turn to become ideal buy points using this beginning of the year as precedence for the stock. And also, I did want to share with you a view of one other stock here that certainly is in also the beginning stages of reversing this pullback here. This is Microsoft, a move back above these shorter term moving averages, and then positive momentum indicators here. Now, I would be remiss to not share with you a view of the software ETF, that is IGV, and you can see it took quite a tumble here. We did see Salesforce, CRM, and other major software names guide their growth prospects lower. So we did see that overall group very decisively move into a downtrend, still struggling to recover. So overall, certainly those big software enterprise names are continuing to struggle, but there are bright spots from my MEM Edge report. We do have one of the top performers in that software space on there. And also from here, what I wanted to share with you is the fact that during this period, earnings season is behind us, and we don't have that driver for the markets. And in examining the stocks last week that had the biggest moves in the S&P 500, I'll share with you a commonality, and that is that these names, by and large, were down and out. So I call this bottom fishing. This is Expedia. The stock was up double digits. You can see it is in the throes of reversing its downtrend. It's going to have this gap. Not my kind of stock, but certainly worth noting. Not quite ready yet. We're just up at that 50-day simple moving average. Another top performer in the S&P 500 last week was Illumina, ILMN. And here we are. You can see the advance. This is one of those medical product stocks. But again, finding resistance at this downward trending 50-day simple moving average. Still has work to do, but we are certainly making progress with that RSI in positive territory. And we can see that nice MACD crossover. From here, I will share with you two names that are of more interest to me, and they were top performers last week. Again, that bottom fishing that's taking place in the markets as far as those biggest movers. And let's take a look. This is Uber Technologies at the top of my watch list. This is a stock that I've owned for some time. I've been on the lookout for this eventual possible downtrend reversal, gap up on Thursday. Again, finding resistance and certainly an obstacle at this 50-day simple moving average, but we do have a positive RSI and that nice MACD crossover. One last name in that healthcare space, again, big mover last week, reversing its downtrend, and that is Abbott Labs, ABT. Take a look. It has advanced above each of these moving averages. We now have a positive RSI and MACD. Now, we did have a sharp 3% advance from here. You will want to drill down to that intraday to help define a buy point. Make sure you're not chasing the stock. And everyone, I hope you have a fantastic weekend. If you like what you've seen, go ahead and hit that like button and be sure to use that link to take a 4-week trial of my MEM Edge report at a very nominal fee. Have a great weekend. I'll see you here next Friday.